Dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. I hope everybody is doing well and in good health. Today our topic of discussion is ledger accounts. As you know, in the last lecture we have covered the general journal and you have learned how to record business transactions in the general journal. And now we are talking about the ledger accounts. So what are ledger accounts? Ledger accounts are separate accounts in which the classified records of all business transactions are shown. In other words, all transactions we have in the general journal, we create some separate accounts for them and then we post all transactions into them. So the separate accounts of all transactions of the general journal, right, simply we call it our ledger accounts. So dear students, as you can see, we have a ledger account of cash here. This is a sample. This account has two sides. One is the debit side and the credit side, the left side and the right side. So all transactions related to cash in this general journal, they are posted into this cash ledger account, okay, simply. So in which manner all debit entries, right, all debit entries, they are posted into the debit column and all credit entries are posted into the credit column. And dear students, as you can see, we have another format of the ledger account, and this is a T format or a T-shaped ledger account. Simply we can call it T account. So what's the difference between these two? The first one is a little bit in detail. This is a detailed format, right? Why? Because we have date, description, debit, and also in some other format we have reference column also. But in this one, the second one, this is the simpler and the easy, right? Why? Because we need not to have more information here. Here we only have the debit and the credit side, okay? So dear students, we work on the first one and then we are coming into the second. So now you are learning how you can post all transactions related to the cash into this cash account. So dear students, after this we will create a ledger accounts for all transactions, but we will use this T-shaped ledger account. So now just to learn how to post transactions into this detailed format, so look here now. So dear students, first try to highlight all the values, all the transactions you are posting. So now we are posting cash, okay? So we see where we have cash. In the first date we have cash, yes, and that is debited, right, in the first date. And then we have cash in the second date. We are not having cash. In the third date we have cash, and also in the fifth, in the 7, 8, 9, 10, 11, 12 and 13. So very much simple. Make sure how many transactions we have cash in, so just highlight them, okay, and then post them, okay. In the first date we have cash, in that debited how much? $400,000. so date first, cash debited $400,000, okay. In the description just mention what is the corresponding credit entry of cash, that is capital, right? So capital, it's mean the cash account debited $400,000 because of capital. Okay, next we have cash credited, okay, date 3, cash credited how much? $30,000. And because of what? Because of purchases. Why? Because I have told you. So for the debit, mention in the reason the credit. The corresponding entry for the debit is credit and for the credit is debit. Next we have date 5, cash account debited $60,000. So date 5, cash account debited $60,000, right? And because of what? What is the corresponding entry? Mention it in the reason, okay? Because of sale. So that is sale, okay? You can say cash account debited $60,000, right? Because of sale. Reason is sale. You have done sale, you have received cash. Okay, next we have date 7, yes, cash credited, date 7, cash credited how much? $20,000. and this is because of furniture. Sure. Okay, next, date 8. So cash account debited $9,000 and because of unearned sale. Look, the reason here you can put the credit, because for the debit the reason is credit, and for the credit the reason is debit. So mention the reason in the description simply. And next we have date number 10, right? So date number 9, cash credited how much? $15,000. So date 9, cash credited $15,000, and this is because of machines. So dear students, very much simple. Continue to post all debit entries into the debit column and the credit entries into the credit column, and then we will have at the end all the entries posted. Okay, so look dear students, once you have posted all debit and credit values into their respective columns, then you have to balance it. Okay, and have to do the balance very much simple. This is cash account, cash is an asset account, so keep in mind asset and expenses, they have a debit balance, right? And liabilities, revenues and capital, they have credit balances. So if account or the ledger account which has a debit balance, then you have to sum up the debit side first, right? So add all the values in the debit, so equal sign and sum all the values in the debit side. Okay, if you are still not sure what we mean by the debit balance and credit balance, just make sure which side is higher, the total of which side is higher. Just sum it up first. Okay, now from this debit balance we have to subtract all the values, all the credit side, this side. Okay, edit, right? And then this value should be subtracted from this total. Okay, so I'm using the Excel function here. Look here, equal sign, and from click on this value minus sum all these values in the circle. Once again, I'm just telling Excel to subtract from this value all the values in the circle. So look dear students, we have a balance of $919,000. This means at hand we have this much cash. So this is actually the benefit or the purpose of the ledger account. Just merely at glance you can figure out how much total cash you have received, right? And how much cash you have spent and how much is at hand, simply. So now you have to add the right column again, so sum all the values and then just check. Okay, both sides must equal. Okay, so this is the total and this is also the total. So dear students, one point it is that this value, right, this is our balance, right? This is our balance, and this balance is called balance CD. Balance CD. What do we mean by CD? Because this balance is carried down into the next accounting period. So this will be the opening balance, right, for a cash in a new accounting period. So dear students, keep in mind this is a debit balance. Why? Because $919,000 value, this is remaining here in the debit side. But because of the balancing purpose, we are mentioning it in the credit side. So in the detailed format of the ledger accounts, the debit balance is shown in the credit side and the credit balance is shown in the debit side. Okay, so you have learned here that how to post transactions from the general journal into the ledger. Now for the sake of simplicity in lack of time, we are using this T format, right, this format for our purpose. So dear students, posting transactions into this format is very much easy. So this is the debit side, right, and this is credit side. Simply the value we have posted, for example cash $400,000 we posted here, right? And we have mentioned the description and the date in some other columns, some other formats we have referenced, right? But here you need not to have any additional information, just bring the value, right? So what we are doing right now here, I'm just copying all these values, copy, and just paste it here. But right click and click on the paste special and click on the values. Why? Because paste special is used to copy only the values. I'm not interested in the format, in the formula or whatever. Why? Because sometimes it creates a problem. So again, copy all these values and paste special and click on the values. Simply, dear students, if you are using the T ledger, right, simply the T shape of the ledger, it is called a T. Why? Because it has a shape of T. Then simply post all these values into the debit and the credit side, and that's it. Okay, now we are doing it for all transactions. So look, dear students, I have created a T accounts for almost all transactions, right? So the cash account, we have already posted the values. So look, dear students, we have cash debited $400,000. So simply we transfer the values $400,000 here into the debit side, right? And then here we have cash credited $30,000. Simply we have transfer into the credit side. Okay, in the same way we have to transfer all the values of the accounts into their respective ledger. So look, for the stock account debited how much? $5,000. So debit stock account $5,000. Okay, do we have any other stock account right now here? No, we are not having it, only one stock account. So if you have any other stock value, so again you have to post it either into the debit or credit. Okay, next we have capital. So look, dear students, we have a capital and that's credited. Okay, then post the value into the credited, so 405,000. Okay, now just check in each and every date, do we have any other capital here? So come down and see, yes, here we have a capital and the 20th date. So capital credited $10,000, right? And I'm just simply posting it. So $10,000 capital credited. Okay, that's it. Next we come to purchases. Okay, where we have, yes, and date 2 we have purchases debited how much? $45,000. So 45,000 we debited. Again, in the next date 3 we have purchases again debited $30,000, right? Okay, and just check, do we have any other purchase account? I think we are not having it, only 2 transactions related into purchase account. So the simple way is try to highlight one by one. So we have posted for purchases and now we are posting for accounts payable. So look, dear students, we have account payable credited in date 2 and how much? $45,000 credited. And next, okay, we have account payable debited how much? $2,000. So $2,000 account payable debited. And do we have any other accounts payable? No. In the 6, 7, 8, 9, 10, 11, 12, okay, here we have notes payable, not account payable. So it's mean no more account payables, right? Okay, yes, here we have an 23 account payable debited $10,000. So just debit account payable how much? $10,000 more. Okay, dear students, just check, let me make sure. If account payable is by the name of a person, then try to mention the name. So here we have general account payable. You can say this is a control account where all accounts payables are added here. Okay, and simply we have a control account of all account receivables. Okay, next we have account receivable. So look, we have account receivable, and that is where, yes, here we have account receivable in date 5. Account receivable debited, how much? $30,000. So $30,000 account payable debited. And also, and next we have in date 6 account receivable credited $1,000. So credit $1,000. Okay, so dear students, just check whether we are having account receivable anymore, or yes, we have account receivable credited $10,000. So credit account receivable $10,000. So dear students, simply just transfer all debit values into the debit side, right, of accounts, and the credit values into the credit, right, and do it for all the values we have here, for all accounts. So dear students, I have posted almost all the values, as you can see it here, right, and now we should do the balancing. Okay, how to balance it? Very much easy. This is the debit side. Why? Because cash is having the debit balance, so you have to add the debit side, sum it, and then you have to subtract the credit side from the total of the debit. So equal sign, sum of all these values, right, minus the sum of all credit values, simply. Okay, so we have a balance of $991,000. So dear students, I've just made it bold. So the bold value is the balance. So in the T account, usually the balance is, the debit balance is written in the debit side, and the credit balance is written in the credit side. Unlike the detailed format of the ledger account, what you have learned there, that the debit balance were we were mentioning in the credit, and the credit in the debit. Okay, so now we have balanced the cash accounts, $990,000, $19,000. This is the balance we have at hand in cash. And how much is the balance in stock? So you can say the balance in stock is $5,000, right? So make it bold. And how much is the balance in the capital? So just sum the value of these two. This is our balance in the capital, simply. Okay, so how much is the balance in purchases we have? So you can just add them. Why? Because we do not have any credit value, so that is why simply add them for the balance. Okay, how much the balance we have in account payable? Okay, so now look here, which side is higher? Because account payable is having a credit balance, so that is why you should mention this value from $45,000 minus the sum of the debit side. Okay, so this is the balance in the account payable. Okay, simply how much is the balance of purchase return? Okay, the balance is same, 2,000. And how much is the balance in account receivable? Okay, account receivable is asset and it has a debit balance, so from 30,000 minus the sum of the credit side, these two values. Okay, so this is the balance in account receivable. How much is the balance in the sale? And that is 90,000. Okay, and the balance in the sale return is same. Okay, and the furniture is also again same. And then in unearned sale, the balance is same. So dear students, let me make it simple for you. What I have done here, we computed the balances, right, for all these accounts. So first look, if we have values in both sides, then you have to sum up the side, right, which is higher, right, which the total is higher. Or in other words, if it is liabilities, revenues, or capital, then you have to sum up the right side, and then you have to subtract the debit side from them. And if they have a debit balance like assets and expenses, then you have to sum up the debit side and then subtract the value, the total value of the credit side from them. So as you can see in the purchases, we are not having any credit value, so that is why if you add all these values, we have 75,000. Why? There is no credit value to subtract from, so that's why simply add it. Okay. And next, dear students, you have to do for machine. So machine, that is $15,000 is the balance. We are not having any values in the credit side, that's why the balance is coming the same, the total value of the debit, and we have the balance $12,000, and you have to compute the balances for all accounts in this manner. So look, dear students, I have computed all the values, right? So the red values, these are balances. So this is debit balance. The cash has a debit balance. It's mean the cash at hand we have $919,000, and this is the stock debit balance we have, and this is the credit balance of capital, and this is account receivable, right? So simply the debit balance we have shown in the debit side, and the credit balance we have shown in the credit side. Okay. Now, once you have balanced all T accounts, then you have to post them into the trial balance. So what is the trial balance? So let me explain it. So dear students, the trial balance is a tool which help us to check the accuracy of our accounting records. For example, we have recorded the journal entries, and then we have created ledger accounts, and then posted all transactions into their respective ledger accounts. Now if we want to make sure whether we are not having any mistakes, right, then we should make a trial balance. So trial balance is simply to check the balances. From the name it's clear, to check the balances of all accounts we have. So how the balances are checked here? All the debit balances must equal the total of all the credit balances. So if both the debit balances of all accounts, right, are not equal to the credit balances of all accounts, it means there is mistakes. So what we are doing, so in this trial balance we have three columns. One is for description, in debit and credit, simply. So now just right from the beginning we start to post all these values, transfer all these balances. So the debit balances is to be transferred into the debit side, and the credit balances into the credit side. But first you have to mention the accounts. For example, the first account we have cash, and then we have stock, and then capital, and then next we have purchases, right, and then accounts payable, and then next account receivable, and then purchase return, right? So look, dear students, first you have to mention and write all accounts, the head of accounts in the description. Okay. So once you have mentioned all the heads of the account in the description, then you have to just post their balances. So how much is the balance of the cash we have? So equal sign, the cash has this much balance, right? Okay, how much is the balance of the stock? That is a debit balance, equal sign, and then you click on the stock balance, right? And then how much is the capital? Capital is having a credit balance. Why? Because the credit balance goes into the credit side, so click on the credit balance. And then we have purchases. Purchases account has a debit balance, so equal sign, and just click on the debit balance. And then we have accounts payable, which has a credit balance, so click in the credit side, and then click on the balance, right? And in this way you should mention we have account receivable. Account receivable has a debit balance, right? So equal sign, and click on the balance. So now I'm just transferring all the balances. So the debit balances, you should transfer them into the debit side, and the credit balances into the credit side. Okay, so we have purchase return, which has a credit balance, so equal sign, and click on the credit balance, right? So in this way you have to post all the balances into their respective columns. Okay, so dear students, once you have posted all the values, right, the debit values into the debit sides, and the credit into the credit side, then you have to total it, you have to add it, right? So let's add the debit side. So we have equal sign sum and take all the values in the range, okay, and also use the same formula for this. So just drag it into the right. So we have both sides, they are equal and they must equal. If they are not equal, it means there are mistakes, okay. So dear students, the trial balance is telling us that there is no mistakes, all the transactions posted correctly. So if there is any single mistakes, you have missed the value, you have not posted any values, so these two sides will never be equal, right? So I hope you have learned. In the first step, we are recording the general journal, and then we are posting all transactions into their respective ledger account. In the final step here we have is to make the trial balance, to check whether the total debit balances are equal to the credit balances or not. If they are equal, it means there is no mistake. If they are not equal, it means there is some problem. So I hope you have learned. If you have any question, then you can ask me in the group, or you can put your question in the comment section below. So have a nice time and wish you good luck.